No, looks like it is.
Yeah, it is. It says it's recording on our side.
Yeah. Okay, good. Okay, so everybody, well, welcome. This is Bitcoin 101 with Eric Janson. As you guys all know, I'm hashtag the tallest man in real estate. And anytime I actually say that I'm a realtor and I'm presenting something, I have to put my license number down here, even though this is not real estate related. So everyone on here are my friends, which is great. And the main purpose that I wanted to do this call is I've been in the space for probably about 4 or 5 years now. I've gone to several different seminars. I've attended, I don't even know how many hours, probably 200 hours I've spent on different podcasts and YouTube videos. And so I just wanted to share it. And we are in the very, very beginning of all of this. And so it's a pretty exciting time, especially what's going to be happening this year with the wall of money that I think is coming. And so I wanted to share that with my friends. And if everyone can make a little money, more power to all of us. So the first thing this is what we'll cover. I'll go over what the blockchain is. It's pretty complicated. I'm just going to get into kind of what I know about it, how Bitcoin works, why it's actually valuable, how do I buy it. There's different exchanges you can buy it on, such as like Robinhood. You can buy it on, I use Coinbase. I know there's Gemini and some other ones. And it's just kind of a starting point of where you can go for that one. And I'll talk a little bit about crypto wallets and DeFinance. DeFinance is really interesting and I'm just learning about it. And so I'll let you know what I know about it, but you can basically have your Bitcoin in an account and earn interest on it. And so that's really changed my view of never actually selling it and just getting interest on this or future loans if I want to, but I'll go into that a little bit more. So let's go to basically in terms of how it works, and let me move this real quick so I can see this. In terms of the blockchain, the easiest way that somebody described it to me, and this was 3 or 4 years ago, and that was the only way it ever really made sense to me, is basically what the blockchain does is verifies different transactions between various parties. And so how they do that is if you take, and I'm just throwing out a number, let's say there's 1,000 computers out there, and I go and pay Jason Bitcoin on that, all those different computers verify that that is actually what happened. And then it creates a new block, and this block that you see down in here is all public. And so you can actually see, okay, I paid Jason a certain amount of Bitcoin, or I transferred a certain amount of money to somebody's account. Blockchain, we're from various podcasts I'm listening to, many are saying that we're in the very, very beginning of this, like probably the second or third inning of a 9-inning game. And a lot of people are kind of comparing blockchain to what the internet was in the early 90s. And blockchain technology will change all industries. One thing that I'm excited about in my industry is title companies. They'll no longer probably exist, I think, in the coming 5 to 10 years, because all of this will be public knowledge. Or if I have a house and I live in Pack Heights and I decide, you know what, I want to tokenize my house and sell it off like shares, it'll be interesting to say, okay, well, with blockchain, I can basically say I've got 1,000 shares, I own 50% of it, the other 1,000 shares represent the other 50%, and then people can buy and trade that. It's going to be very interesting in terms of medical records as well. You'll be able to send this information a lot faster, as well as you could. Some things I've heard about is you could have maybe doctors out there that are sitting on different computers and saying, okay, I've got these symptoms, I've got these diseases, and then all the different doctors can basically say, yes, we recommend this. And then based on the blockchain, the different ones will verify that. And then that's how they can come up with consensus for it. So there's a lot of different areas that the blockchain is gonna basically change most industries. And the thing about the blockchain is, because what it was explained to me, which I thought that was interesting then, is when you have all these different blocks that were verified by 1,000 different computers or 1 million different computers, it's pretty much impossible to hack. So someone can't go in there and say, oh, Eric didn't really pay Jason, he paid so-and-so, some other, let's say Alex, some other money. Now there's different. Now, if you don't have your transaction key and way of sending it correctly, well, that's different. But in terms of the actual transaction, it can't be hacked. And that's what's going to be very interesting going forward. Is the internet obviously is very easy to hack, and so blockchain is pretty much impossible as we know it now. And then in terms of the value of Bitcoin, and this is why it's valuable, and why it's you're seeing this meteoric rise is what's happening. One of the biggest things is the scarcity. And so when Bitcoin gets mined, and there's basically how that works is there's all these different computers that are out solving these various mathematical problems. And when they solve them, then they get rewarded with some Bitcoin. And so the scarcity of it is there's only 21 million Bitcoin that'll ever be mined. And based on the mathematical problem, it looks like all of that's not going to be mined for roughly, I think it's like 2132 or so. And we're roughly mined about 17 million. But as we get closer and closer, it gets harder and harder to solve those mathematical problems between the computers. And so in the beginning, there was a lot of Bitcoin that was mined, and it is very easy to, go out there, have a big computer and actually get Bitcoin for it. Now, as we get close to that 21 million, it gets harder and harder and harder to do. So that's one thing that is basically the scarcity. So unlike our money supply right now, where we're going to go print, another $1.9 trillion, and the value of our money is going to drop. It's actually been dropping quite a bit over the last few years. The scarcity issue with Bitcoin, you can't ever find more than that 21 million. And that's the same thing kind of when you look at gold. If gold all of a sudden, they start finding a lot more gold, or it becomes, let's say, worth $10,000 an ounce, a lot of people are going to go out there and try to go and rape the earth and try to find more gold. So, and then the other main part is decentralized. So nobody actually, Bitcoin's not a company. It's a scarcity in that there's only 21 million mined, but there's no central government or central agency that can then all of a sudden print more of it or make it less scarce or whatever they want to do, such as what the Fed's doing to manipulate money supply all around the world. Also, it's easy to transfer in terms of that I can send it to anybody right away, and within a matter of minutes, usually they're going to have it. So if I had actual gold bars, for me to transfer a bunch of that to, let's say, Switzerland, I have to get on a plane, send it over there. It gets quite expensive, obviously. And then I mentioned before that it can't be hacked. And now what's interesting about that is basically if you have it in a digital wallet, which I'll get to a little bit later, you basically own it on a device. So, but if you keep it, which I do have all my Bitcoins on Coinbase, which is an exchange. And a lot of everything I'm hearing about is you really have to put it on a digital wallet, because if Coinbase, the exchange, actually gets hacked, then I could lose all my Bitcoin. And so that's one of the issues with that. One of the things too is if you start looking at it more like digital gold, is probably the best way to use it. I don't know if it'll ever get to a point where we start using it in terms of normal transactions, such as coffees or, things like that, because it does take a while to send that. And they don't have the blockchain can't actually handle that many transactions, at least on the blockchain for Bitcoin. And then on average, it's been going up 200% a year. There's nothing that you can talk about in the last 10 years, which has done even close to that. So that's kind of why it makes it valuable. Does anybody have any questions on these kind of points right now, or anything I can answer that I've talked about so far? Anybody?
Yeah, I'm Eric. This is Jason. I'm curious about on the hacking piece. So the blockchain can't be hacked so as long as you have your key, but the exchanges and some of these other places that are holding them are getting hacked. We're hearing that they're being taken. So what's the reality of you getting yours back that may have been stolen from an exchange?
Yeah, and so that's the risk you take, from what I know. And so I bought it what's called, and I'll get into digital wallets in a little bit, but I bought what's called a Tezos wallet. And so what I can do is take my Bitcoin that I bought on Coinbase and put it into that digital wallet. And then in the digital wallet, there's a key that you have that's basically 25 letters and numbers long. And then that's how I access it. I know a little bit about digital wallets, but I am definitely not an expert. So you definitely want to get out there and explore that on your own. But right now I have it on Coinbase. I'm not worried about Coinbase getting hacked because they've been around for as long as they have. They're about to go IPO soon. They're kind of the gold standard of what people use for it.
Right.
However, I am running a little bit of that risk.
Got it. Okay. But so I was just sort of confirming, even if you have your key, the fact that you have that piece, it still could leave an exchange and you couldn't get it back. That's possible.
Yeah, my Bitcoin on Coinbase could get hacked and I could lose all of it.
Got it. Okay, cool. I just want to make sure the difference between holding your own key and not. Okay, cool.
Yeah. And again, it's better to have your own digital wallet because then I have it physically and it's not on the exchanges. And that's what happened. Like if you hear of like Mt. Gox, this was 7 or 8 years ago, as there's an exchange that got hacked, all the Bitcoin got stolen, and so obviously a big issue. But then on the digital wallet side of it, though, which I'll get into in a little bit later, is you just got to make sure that you have that key and the numbers and letters that are associated with it. There's been so many stories out there where a guy has it on his Tezos thing, he can't remember what the password is, and he's got 5 million Bitcoin or whatever sitting there, and he doesn't know where to get it. I've heard that story a few times. So that's one thing with the wallets that I personally need to learn a little bit more on. One thing my friend told me too is I bought my Tezos wallet off of Amazon, and he's like, well, make sure you reset the wallet, because if it's just some person that was selling it on Amazon, I might be sending my Bitcoin to that person. And so that's where I need to get more up to speed on it. But I think it's pretty easy just to reset it. And it should already be reset as long as it's from like a normal company, which I thought I bought it from. But you never know with Amazon or where you're actually buying it from.
Right. Okay, cool.
So, and then this is so I just pulled this, as you could see, today at 4:21. The app that I'm using on this one, which I may actually forget to send out to people, but it's CoinStats is the name of the app. And I think it's $5 a month. And what I like about that is, and I have Bitcoin on a few different exchanges. I have it on Robinhood. I have it on Coinbase. I like having this as like a central area that I can log all my transactions into. And that way I can see what my total portfolio is, instead of having to log into Robinhood, having to log into Coinbase and like various places that I might have it. And so you can see here, basically in the last week, we were at 57.5, which is pretty much an all-time high. It hit a little over 58,000 a few weeks ago. And in let's see here, in the last month, it's gone up 47%. The last 6 months, it's gone up 426%. So for you that aren't math majors, if you had $100,000, you'd have $426,000 now, which I wish I had $100,000 in Bitcoin, but I don't. And that's just in the last 6 months. And then if you look in the last year, it's gone up 565%. So there's no asset class or anything out there that can compare to that. All right. Well, I wouldn't necessarily, I don't know about 565%, but in terms of the overall, how long it's gone up, and now that it's at 57,000. So one of the things I wanted to discuss, and why I think this year is going to be huge, and honestly, all of this I'm regurgitating from like podcasts and various, YouTube channels and things that I listen to. So none of this is my new idea, but one thing that really changed, I would say, in the past month or two, is Michael Saylor up here. And a friend of mine, she actually writes for Forbes magazine, and she does Bitcoin. She actually writes about crypto for Forbes, and she's been doing that for, I don't know, about 3 or 4 years. And I remember it was maybe 2 months ago, she was talking about a Michael Saylor podcast or YouTube video that she saw. And she's like, oh, it just makes me want to buy more Bitcoin. I never heard of the guy. I would say most people haven't heard of him unless you're in this space. But what he is he owns MicroStrategies, and they're a software company. But they recently, back in August, put a few hundred million into Bitcoin on their balance sheet. And then what he did is he started getting on YouTube and all this stuff and talking about how corporations should now put Bitcoin on their balance sheet. And one of the main reasons is to hedge against inflation with the dollar that's going to be crashing or is going down. There's, the decentralization, everything that I just spoke about. He did a big webinar, I think it was in January, I want to say, and he was hoping to maybe get 10,000 CEOs and CFOs on this 3-day webinar, and he ended up getting 10,000. And so when I heard about that, I was like, okay, more and more companies are going to start putting Bitcoin on their balance sheet to hedge against inflation. And especially when you start seeing that it goes up 200% a year on average, how can you sit there with gold, which is maybe going up 9 or 10%, losing out on that, basically 190%. So I highly recommend I'll send you guys some links and things like that if you want to start listening to him, but he's very, very interesting. And he can't publicly go out and say that he was talking to Elon Musk, but it sounds like he definitely was. And then all of a sudden on February 8th is when Tesla announced their K1s and that they're going to be buying Bitcoin on their balance sheet. And that's all of a sudden when we saw this huge spike start to happen. One of the richest guy, I think he's either number 1 or 2 or possibly 3 richest guy in the world says, yeah, we're putting this on our balance sheet. That basically is the go ahead for all these other companies to start doing that with them. And I think that's why this year, and especially even next year, there's gonna be more and more companies are gonna be doing this. And they're the ones that have the real money. When you're, putting $1 billion into this and multiple companies start doing that, that's when the value, I think, will really start going up. Also too, with I've recently, it's gone up quite a bit in the past. Well, I showed you in the past week, it's about 20%. Once the stimulus package passed, that's when we started seeing it go up about another 5 or 10% in the last few days. And the reason being is all of our money all of a sudden just, got devalued basically. And so as the government goes and prints more money supply, now there's more money out there. More money out there means we all have less in terms of our value. And so you will start seeing inflation. Gas is already starting to go up. Your groceries will start going up. Everything's going to start going up. So why have money sitting there that's going down when I can have Bitcoin that I think will probably continue to go up? Morgan Stanley recently announced that they're doing an ETF. Canada, a few weeks ago, did an ETF. They raised $450 million in 2 days. It's the most successful ETF ever in Canadian history. Square announced that they're going to, you can do it now. You can start buying Bitcoin through Square and transacting that way. They did 1.7 billion sold just in December. Also, Square, Tesla, MassMutual, PayPal, they all hold Bitcoin on their balance sheet. And that's a little typo I did there. They all hold Bitcoin on their balance sheet, and more of that's going to come. Coinbase announced that their IPO is going to be coming soon, and that's the exchange that I mentioned that you can buy it on. Who knows when that's going to come out, but it should be in the next month or two. Recently, MasterCard announced that they're going to start getting into space, and that's what's interesting too, is, Bitcoin's really slow in terms of how many transactions they can do on the blockchain. But if MasterCard has a bunch of Bitcoin and allows us to then transact in it, that'll get more and more people more comfortable with it in the space. Anybody have any questions on, what's happened in the last 3 or 4 months, or anything you've heard about that maybe I can answer for you? Cool. All right, so let's go. One of the things I mentioned too is Coinbase. And so what they are is they are an exchange that you can buy Bitcoin and actually physically own the Bitcoin. And then if you want to transfer it to your wallet, it's very easy to do. And there's tons of videos on there of how to do it, but it's pretty self-explanatory when you do it. If you do transfer anything to your wallet, don't transfer the whole thing. Like, just do a small amount, make sure the transfer goes through correctly. Because you want to make sure that you copy what you're transferring to your wallet. So like my Bitcoin has its own separate key, and then I copy that key, send it to my wallet, and then it basically takes and accepts it. There's a lot of different cryptos that you can go on there and buy. My portfolio personally is I have roughly about 2/3 Bitcoin and 1/3 Ethereum. And then I've got a little bit of XRP you see here, and I don't even really count them. They kind of call them as shit coins that you'll hear if you listen to different podcasts and stuff. And they're just, I mean, it's whatever you want to, you can do your own research on that. But kind of the way that I've heard recently is that if you look at Bitcoin as more of digital gold, and then Ethereum is more of the actual technology of blockchain. So all these different companies and different apps and different things that are being created on the blockchain, almost all of them are created on the Ethereum blockchain. And so one thing I heard recently that kind of resonates. If you think of Bitcoin as the digital gold, Ethereum's that technology. So where do you want to put your bet on it? And Ethereum's actually gone up more than Bitcoin has in the last year. Personally, I just think Bitcoin's the better bet. It's not an either or. I'm going to have both of it. So for me personally, like I said, I have about 2/3 Bitcoin and 1/3 Ethereum. And then what I can do is, if you guys don't have a Coinbase account, I'll email everybody a link. I mean, full disclosure, they give me like $10 if you sign up through me, which I really don't care if I get that $10 or not. But I'll make sure everyone has a link for that as well. I think it's the easiest way to go ahead and end up buying it personally. There are one thing I did want to say is so Robinhood, which you've heard in the news, is basically an exchange, but not where you actually own the Bitcoin. It's like a stock exchange. So I have some Bitcoin. I think it's like $500 on there. The thing about that is I can't physically take that $500 and transfer it to a wallet because it's just on the exchange as basically like a stock. So the nice thing I do kind of like about that is it is kind of fun to play around with buying high, or well, typically actually that's what I do. Buy low and sell high. And consult your tax advisor. I'm not a financial advisor either, but consult your tax advisor about the taxes on that. From what I've heard is, as long as I keep the money on Robinhood, it's not a taxable event until I convert it to dollars. So I can take that $500 of Bitcoin, put it into just basically money on the exchange, so just dollars. And then when I want to buy it again, then I could basically go and buy the Bitcoin. But every time I sell the Bitcoin, or I buy Uber stock or Apple or Amazon, whatever stocks I want to buy, that's not a taxable event. It's only when I then convert it to dollars that it's a taxable event. But again, consult a tax advisor about that, because I'm definitely not one. Does anybody have any questions about, Coinbase versus Robinhood? Does that make sense of what I was saying there?
Yeah, no, so that definitely made sense. And I like the differentiation you made between like owning some Ethereum, owning some of the technology, but Bitcoin being the commodity essentially. That was a good,
Yeah.
that helped me understand it a little better.
Yeah, exactly. So yeah, it's kind of like Ethereum's the internet, and then Bitcoin would be digital gold. And that's where I hear, and I've been hearing this for years, and I still hear it now, and especially chats when my friends will post something about Bitcoin and somebody will go in there and slam it about how it sucks or whatever. And, they're like, oh, it takes too long to transact, or it'll never work. That. And I'm like, well, okay, well, you're talking about something that's fairly recent too, in terms of its infancy. And so, the Ethereum technology is constantly being updated, and it's getting faster and faster. There is gaslighting fees, which honestly I don't know that much about, but it's basically the fees of every transaction you do on the Ethereum blockchain, or even Bitcoin when you go and send it to people. So I don't believe it has to do necessarily with the percentage. So I can send $1 million in Bitcoin, and it's the same percentage that I get charged in Bitcoin versus sending $5. And those fees do go up or down as far as I know. I don't know why it gets slower sometimes and better other times. I haven't really done the research, because honestly, I'm really not moving Bitcoin around. It's going to go into my Tezos wallet, and that's probably about it. So,
Hey, Eric.
Yeah.
in Robinhood, are you saying that if you have Bitcoin in Robinhood, you can't transfer Bitcoin out of it? So you never actually physically, you don't own.
Correct. From what I know from it, and I just bought my first that $500 I bought recently was within the last month or so, and I didn't see any way that I could transfer it. So I can sell it and put it into dollars, and as long as I don't take those dollars and put it into my account, that's not a taxable event. It's just also converted to dollars.
Right.
But
Well, that's no.
I was kind of messing around with like Dogecoin, which is just a complete crap coin. I mean, it's absolutely nothing. But oh, it ends in 10 minutes. Interesting. So yeah, I mean, anyway. So I was kind of playing around with that. I bought it at 40. I sold it at 70. It dropped to 39. I bought it again. I'm going to try to sell it again at 65. It's been kind of fun just kind of play with that.
Yeah.
But there's no way of actually sending that to my wallet, at least that I could see.
Okay.
Let me get to the next one then. So digital wallets, I'm not going to go into that too much because we already talked about it. But yeah, basically from the best way to do it is, if you can, is have a digital wallet that you can then take all your Bitcoin and put it into there in a secure place. And that way, it's not on my computer, it's not on an exchange, it's not anywhere. It's actually, physically a software wallet. There's also, or I'm sorry, it'd be a hardware one. There's also software companies out there that'll do that as well. Again, you can kind of go and discover that a little bit more. But this is what I want to talk a little bit about, because this is what's really changed my view in the last 2 months or so. And you're hearing about DeFi and decentralized finance. And what's coming out is, and there's a few apps that I've actually I've downloaded recently that are DeFi. I haven't transferred any of them into it, but BlockFi is one. I think Crypto.com's one. And what's interesting about this is, with DeFinance now on several of these companies, is I can take my Bitcoin and transfer it into their account. And they're basically similar to a bank. Now, they're not backed by the FDIC, so they could technically take all my money and go run somewhere else. And that's why personally, I haven't done my research enough on these various companies, but I've heard them a lot on different YouTube things and podcasts. So I'm like, you know what, why not put some of my money in there? And what's interesting about it is you can get a return on a lot of these of 10%. So what's really changed my view over the last few months is get as much Bitcoin as I can. Let's say I had $1 million in Bitcoin, then I can get 10% interest on that $1 million. And now I'm getting $100,000 a year, and I can buy more Bitcoin, or I can use that to help pay for my mortgage, or, whatever it is that you want to use for it. Another really interesting thing on that too is you can also take a loan against your Bitcoin as well. So if I have $1 million of Bitcoin in there, I can then go get a loan at 10% of the loan to value, which in that case would be 100,000. Or I can get a loan at 20% loan to value. So I can get a $200,000 loan. And depending on the loan to value, you're only paying like 4, 6, 7%, depending on what that is. So that's very interesting that, I'm just throwing out, if I did have $1 million in Bitcoin, then I could go get a loan and get $100,000 on that, still own the $1 million of Bitcoin that continues to go up, and use that 100,000 towards a down payment on a house, on maybe I need, to do whatever I want to my house, buy a new car, whatever it is. And what's interesting about that is, one guy brought up the concept of that, is that if you had $1 million in there and you need that loan, you could just continue to refinance that loan basically. So if my Bitcoin's going up, 200% a year on average, then, basically what is that? And I'm going to have $3 million in 1 year. Then I can also get a loan to value at 10% again. Now I can get a loan to value at 300,000 or 700,000 as that continues to keep going up, assuming that, Bitcoin goes up. You do have to, one thing I did learn, which I didn't know about too, is you do have to be worried, or not worried, but one concern is getting margin called. And you can, research that, later on. And I'll probably do another thing just on Definance and get one of my financial advisor guys to actually talk a little bit more on it. But the only risk with that is, let's say on that $1 million and I had $100,000 loan, if Bitcoin all of a sudden dropped down to the $100,000 mark, you'd get margin called is what they call it. And within, I think about 3 days, you have to then pay the loan. So for me, I was kind of thinking, I'm like, okay, well, what if I just did, $10,000? Let's just say I had 10,000 in the company of the definance company. I got a loan for $1,000, take that $1,000, bought more Bitcoin. Now I've got that just at a 4% interest rate. Bitcoin keeps going up. If I did get margin called, I can go pay the $1,000 right away, but I don't see why Bitcoin would all of a sudden drop 90%. So I really doubt I'd ever get margin called. But wanted to talk about that a little bit because that's what I'm really excited about coming up here in the next few months and going down the line in the next year or two, because I really do think that other banks, like the big institutions, Chase, Bank of America, all of them are going to start getting in that space. And the benefit for them owning our Bitcoin is now they can do what banks do. They can buy low, sell high, do shorts on it, all that other stuff that I really don't know that much about. And they need Bitcoin to do that. And so I think that's really interesting what's going to be coming up. And that's why I'd say in the last month, I'm like, okay, I don't think I'm ever going to sell this stuff, versus a year ago, I was like, oh, well, maybe I'll use it towards part of my down payment on a house, or, maybe with some other financial goal that I might have. And then the last thing I want to talk about is, if you guys have any questions, let me know. I just started a Facebook group today. If you want to message me, you can join that. I will send out, actually, I can probably send out a link to the Facebook group, and I'll send a link to the Coinbase account. And then I'll let you know some of the companies that I've looked into a little bit on DeFinance. Like I said, though, I don't know much about it. They're not backed by the FDIC, if that scares you or not. And so it's something that I'm just looking into. But I was like, okay, if I take, maybe 10 or 15% of my total Bitcoin and put it into something that's DeFinance, start getting familiar with that, and then earn interest on it, that'd be pretty cool. But what questions does anybody have, or anything you've heard out there in the news that maybe I can answer for you?
I'll throw this one, Eric, on the sort of like in the places like Robinhood, where you're on an exchange and you're buying it. It sounds like they're holding it, but as long as the value stays in, we'll say that like crypto pocket in your Robinhood account, that's never, those gains aren't reported essentially until you turn it from a cryptocurrency back into cash. Is that your understanding?
Yeah, and again, I always have to preface this, I'm not a tax advisor, but from what I understand is you only get taxed when you convert it back into dollars and you take it off the exchange. Okay. So if I have $100,000 in Robinhood, I can do whatever trades I want, exchange, I can buy Uber stock, I can buy Apple, I can buy whatever I want, trade it, do whatever I want. And it just sits in like your money account when it's in dollars. But it's not till I take that money account and convert it into my bank account that I get taxed on it. And then one thing I do want to bring up real quick here too, and this is according to my tax advisor, but again, I'm not a tax advisor. But one thing you do have to be concerned about with Bitcoin is short-term capital gains and long-term capital gains. And so I believe if you take out your Bitcoin and convert it to dollars within that first year, I believe it's 20%. And then if you held it for at least a year, then it's 10% capital gains tax you make. So that's another thing that I like, that I have all my transactions on CoinStats. As well as in Coinbase, you can look in and see all your transactions. But then I can at least say to the government, if I ever decide to sell it and want to get cash for it, I can say, hey, I've owned this, amount of Bitcoin that went up this much, and I owe this much on taxes. But again, consult a tax advisor about that. So that's basically everything. I think I've literally only got 30 minutes or 30 seconds left here. But I'm going to do this again, and I'm going to probably market a little bit more. And, I'm trying to build a community. Would love to get more of your friends in on this too, start talking about it, because the more that we all buy it and the more that we educate everybody on it, the more that it's going to go up. And that's one of the reasons why I want to do it. And I like talking about it because Alex and I have been talking about this for 4 or 5 years, but he's the only friend I know in the past 4 or 5 years that does it. So there's a few friends I know that are starting to get into it. And think about that too. I've got over 1,000 friends on Facebook and LinkedIn, and there's only 6 or 7 of us that actually joined in on this call. So we're in the very, very beginning stages. I'm super excited about what's coming up, especially this wall of money, of more corporate money putting on their balance sheet. And obviously, if you have any questions, you guys can always call me. You got all my number and my information too. So with that, I'm going to say goodbye to everybody. Thank you so much. And again, if you have any questions, just reach out. Thanks so much, guys.
Awesome, dude. You rock, EJ.